Hey folks, David Frost, mystrategicforecast.com. Welcome for another episode of Common Sense Technical Analysis. Today is June 13th, also known as Friday the 13th, 2014. Now, earlier in the week, I said today may be a down day if the pattern set up correctly for the remainder of the week or during the week. And we know that didn't happen because yesterday was the down day I was expecting. Today, only worse. I was expecting worse today. So I told you guys that I was not going to issue a trade alert or a trade recommended for Thursday afternoon on the short side. And it's a good thing that I didn't do that because basically, while the market was down early today a little bit, and we can take a look at the intraday chart of the SPY. And right here, the market started down, right out of the chute today, and then it immediately reversed, and then it was float the rest of the day. It was the typical Friday float. So back to the daily chart for a second. So that's why, when the plan doesn't go according, or the market doesn't go according to plan, if you're planning a trade and the pattern doesn't set up correctly, you don't take the trade. And that's why we didn't take the trade. And this is a great example of how sometimes not to trade the market. You don't have to be in a trade. There's always one around the corner. So right now, you basically have a continuing bullish market in the S&P, and next week being options expiration, but it's not just the normal typical options expiration. It happens to be the Grand Mac Daddy, which is quadruple witching. Everything expires, including the quarterly options expirations or the quarterly options. So it's going to be a whipsaw week. The big, large banks, the big, large players are going to whip the market around in an effort to stop out all the puts and calls that are around the current prices within dollars of the current prices. So you'll see stocks that are making highs this week go down next week and vice versa. So next week's not the week to really be establishing too many positions unless the pattern really, really sets up in your favor. You can play some extremes, and that's fine. But for the most part, this is the waters are infested next week for sure. You gotta be aware that there's a lot of game playing. So there's probably going to be a decent down day next week and a decent up day next week, and usually they're back to back. So maybe it's a Tuesday, Wednesday type of thing. I don't know. We'll see how it plays out. Never can tell what the institutions are going to do with the market. Let's go to the interest rate market and take a look at the 10-year bond. And the 10-year interest rate was up a couple of ticks today. This is the interest rate, TNX. And basically, we're still in this, it looks like we're in an upward pattern, although we had this big down day yesterday. So we could consolidate and go lower, or we could pop back up, and we'll see. I don't think we're going to get much higher than 266, 267 on the 10-year. And if we head down, this is a good area to look for another low established if that's the case. And we'll play it by ear, and we'll see how it plays out as it happens. Real quick, let's go over to the 30-year. And it's really the same chart for the most part. Upside right now, I think, is about 350. I'm staying with that target. And downside is same thing, maybe about the 330 area if we head down farther. I don't think we're going to do that, but you never know. We'll see what happens. We'll see what the pattern tells us. We'll see what the chart tells us to do. Let the market tell us what to do. Gold had another slight update today. This is the GLD. Basically, we're at this gap window here, and if we get through, we might go up to the 124.5, 125 area, like I've been mentioning, but there's a ton of resistance in here, and I really don't see any higher prices than that at this stage in the game, and that I'm looking for a better low probably in the month of July, and then if the pattern tells us and the chart pattern tells us we'll take a long trade on GLD. And let's go over to USO, and we had a pause day in the oil market today. Not much happened. And, it's funny. Nothing happened. Nothing changed in Iraq. Only oil didn't go up today, so nothing was said about Iraq and oil. It's just ironic how that happens. But nevertheless, this was not a market to be short, like I've been telling you. And frankly, it's probably not a market to be long because there's really not a lot of upside left. We go over to the weekly chart, and your upside is 39.5 to 40, which translates to 108 to 110 in crude price, the crude contract price. So I'm not going to be long this market unless we get a setup. So if we get about a week or so of consolidation and we stay inside this large up move here, then things could change a little bit and we might see a little bit more of a surge to the upside. But again, we'll let the pattern play out, and if we see a good pattern to take a trade, I'll certainly issue one to the members. What else do we want to look at tonight? We want to look at how about GDX. Let's look at GDX. I'm getting some emails on GDX, and then we're going to take a look at a couple of stocks tonight, and then we'll go from there and make it a weekly wrap. But here's the GDX, and basically, well, this is the weekly, so let's go back to the daily chart. And we had this move off 22, and I get a lot of emails about gold and GDX. And is GDX going to go on a run? Is GDX? I think it's done. Is the point? I think into this 200-day was about it. There's a lot of consolidation here, which lends itself to resistance. Upside target here on the outside would be 24.67 up here at this high. So call it 24.5 to 25 would probably be my upside target here. I don't see any more than that. So I think that as gold makes its low in July, like I suspect it will, I think GDX will follow, at least it should follow. And if you look at the longer term picture here, this is a high up at $28. And this was back in March. And then, even though we're on a little bit of a run here, we're nowhere near that high. Let's look at, I haven't looked at this yet, so let's look at a Fibonacci retracement and see where we stand in the daily chart, see what kind of resistance we're coming into. Well, lo and behold, 38.2% resistance is at 24.25. 24.26. So there you go. The numbers seem to always work out any way you slice it and dice it. So that supports my case that you're going to have a lot of resistance in this area, and then your 50% retracement is just under 25. So that supports the case. That's the outside target. This is the near-term target, and I think that's probably due for a pullback. Now, if we get a bullish pullback consolidation pattern, maybe we get the higher price, and again, it might warrant a trade, it might not, but we'll see how it plays out. So that's where I stand in GLD right now. GDX, and let's get rid of this, remove that. And let's look at Apple. I want to look at Apple because I'm getting a lot of emails on Apple, and is Apple, gonna pierce 100? Is it gonna go to 110? Who knows? This is obviously post-split. Well, Apple had a down week. However, it's still in a bullish market. You see on the daily chart, at least, this widening of the 20 period and the 50 period moving average. If this stays wide, this certainly supports higher prices. So I would say that next week, if you get a move down and this level here holds about 89 to 90 holds, I think you have another leg up in Apple, and I think you will pierce 100 before the market turns down. So again, here, if we see a good chart set up, we'll issue an alert. But those are my thoughts on Apple right now. There's really nothing wrong. Let's just take a look at a longer-term picture on the weekly basis, and I'll tell you what I see here. So here it is. Until you can take out this level here, which is 100, a little over 100, we'll call it $100.72. Well, let's get the exact number. The high is $100.72. If you can take that out, then you can certainly see higher prices. And what you see here is on a weekly basis, you have a second week of sideways consolidation. This is a pause week, I guess you would call it, and then you start to consolidate down. So you could make a pop higher, but I don't know if there's enough time left because of my projected number or time frame for a market top, which is coming shortly, and the members know precisely, or or almost precisely where I think that's going to come. And we're still a little ways away from that. And so it's kind of a race with Apple to see if it can challenge that high before that time frame comes. Let's look at, get a lot of emails on Google. And let's look at the Google L chart, I think it is. Yep. And so here we go. Again, this high hasn't been challenged yet. I don't know if we'll get up there. This is on a weekly basis, but certainly this is setting up for higher prices. We another week or two of consolidation here into options expiration. Count that week and maybe the week after, and then we can certainly see higher prices. Let's take a look at what the daily chart looks like. And here, you got a long way to go to challenge these highs. However, this is going sideways here after this up move, and you can certainly challenge some of these pivots here, like 588. That's definitely in the cards. 592's in the cards, so we'll see what happens. This looks healthy. I think that if we see some more sideways action next week, may warrant taking a look at a trade on Google. So we'll see what happens there. Take a look at one more. How about Amazon? And then maybe we'll take a look at a bank or two and give it a wrap. Amazon, kind of the same chart, way off the highs. Not going to challenge the highs in my opinion, but certainly can have some more upside. We'll see. Maybe challenge the 200-day here. If we look at a weekly chart, what you see here is a little more damage on the weekly chart. This is way off the high. But I want to take a fib level here and show you what this looks like and where we might anticipate a stop out point or a level to stop. See, we already stalled here at the 38.2 retracement. If we go higher, you probably stall out here at about 345, 350 at the 50% retracement. So those numbers seem to work out. That's on a weekly chart. And if we look at the daily chart and just recognize where those numbers are, and let's, here we go. 200 period moving average, maybe pierce it, challenge this high here, not out of the question. So those numbers jive. So this is still in a bullish market. If you come down and test the down here 315 level next week, that may be a good level, because what you can do is if you picture a trade here, you may get a support at these pivot tops here, this sideways consolidation and these pivot highs at about 315. You got the moving averages moving up, so this looks like could be a good trade setup. And what would happen is if you take the 315 and then where your stop at would be, just below this this big move here at, you would put it about 307, and you give yourself a tight stop, and if it continues up, you trail your stop up, and if it goes down, you stop out at 307, and not a lot of harm on a pretty decent trade setup. So that I'll be looking for that one next week. Let's look at one of the bank leaders, JPM. That's basically the leader of the financial sector. And here we go. I mean, we're still in an uptrend here off this low at 53, and there's probably some more upside here. I mean, it's going to maybe challenge this area at 59. I don't know. Well, I don't think we'll get through there, but certainly halfway up there, 58, 58 and a half, I think is in the cards. I don't know if we'll get all the way up, but halfway up this red bar, definitely, yeah, I think that's a possibility. That would probably find some resistance, and we'll see how the pattern plays out at that time. Anyway, folks, Common Sense Technical Analysis, thanks for tuning in. This is your weekly wrap on Friday the 13th. David Frost, MyStrategicForecast.com.